Welcome to Make America Healthy Again. Join Dr. Charles Antinori and friends as they share solutions, tips, and insights that only doctors know for creating better health. Here's Dr. Antinori.
So this is the Make America Healthy Again podcast from Dr. Charles Antinori. Today my guest is my good friend and financial advisor, Joe Yocavitch. And we're going to talk about, managing money and managing stress as related to managing money. Joe, you want to introduce yourself and talk about anything, the book or anything? Yeah.
Well, absolutely. Thanks for having me on today, Dr. Antinori. It was always a pleasure, and it's always a good time for you and I to get together, regardless if we're talking about your money, just in general.
Right.
We became friends and acquaintances through our working together, and I know I find out that you're a wine connoisseur, and the fact that I make my wine, you become now a wine guy with me, so to speak. You asked me to come on the show today, and I want to make sure the listeners, people that are watching us today, really have an understanding that financial planning has changed dramatically over the 40 years that I've been doing this. One of the most recent books I've written, and it is my radio show that I'm on every Saturday and Sunday. It's called The Heart of Your Money. And being in the business is 40 years, doctor, it really made me understand that I was working with 70 and 80-year-olds when I was in my 20s when I worked for Merrill. So it got an understanding for myself as an advisor, what kind of thought process does most people have going into retirement. And stress and money go hand in hand. And if you don't have a plan, and no direction, there's a lot of issues you're going to be faced with. Sleep problems, anxiety, relationships with your spouse, and you really don't enjoy life like you should enjoy life if you think about it.
Right.
Putting money away is somewhat simple for me because you're putting it away on an ongoing basis. But when you go into retirement, it's a game changer. I use a scenario in my book. On page, or actually on chapter 8, I talk about sequence of return, how people spend money in retirement. It's different than putting money away, but stress is a major issue I see. I know you and I were talking before we jumped on this call, and you've been in your business for a long time, but when you leave the business that you're in, you have that gap of what would you like to give back to the society? How do I get you to start to think differently of being in retirement? And you were lucky enough to be able to work with in the same domain of your profession that you came out of, which is important, because I truly believe that it's so important to have people like you to still be mentally active in what you do. Yeah,
I really look forward to the 2 days a week working in wound care. And even, my book and these podcasts are just something like, the whole reason of the book is I felt like I should try to some way give back my experience, share it with people, especially since healthcare is such an important part. It's been a little bit on the back burner. I thought Robert F. Kennedy and everything, I thought it was going to be more, but there's so many other things going on between ICE and, Iran and everything else that the healthcare hasn't really jumped to the forefront. But people this month, like getting their healthcare bills, their insurance bills for the new year, talking about stress,
I talk about, for instance, you're mentioning healthcare itself. If you don't plan correctly in your distribution mode, your IRMA, which is part of your Medicare premium, will go up depending on how you take income from Social Security and pensions and, IRAs and 401ks. But people have money stress. And my job is to make sure I uncover that right up front with people in general, having those type of conversations. Not all planners work that way. A lot of planners in my space only will do asset management, AUM that's called. But you really have to understand how income works going into retirement. You also understand the strain that money puts on people's lives. Remember something else, it's where you came from sometimes. If you were brought up with a very, close-knit family where you'd never spent money, a lot of times when you go in your own retirement, you think back how that was. Yeah. Or if you were in a family that would spend frivolously all over the place, that might be the way you go into retirement, spending all over the place. So we're here to making sure you enjoy life, and we have all those uncertainties, because some of it's an invisible way on you and your spouse. And what we do is we try to slow it down for a second. And you don't need everything right now, but what we want to do is make sure we put a plan together. And we have a plan, we call it the master plan, where we put everything together almost in your profession, like an MRI, an EKG. It's written down, and then the client can actually see exactly what the goods and bads are on any decision that we make together. And it takes everything. It takes in the standard deduction, which the big, beautiful bill just put in place last year and this year. So we do that for our client, no cost, but we want to make sure that stress is taken off the table, because stress is something that you can't see or smell. When you start having a conversation with somebody, it changes the game on our conversations with our clients.
Yeah. Like, we talked about some of this before we came on. That lady, the young woman, the 60-year-old woman I was telling you about, before she got sick, she was complaining because her insurance premium, she's a healthy 59-year-old woman. She's talking about paying $1,700 a month now for health insurance. That's stressful. When you got a job that makes a certain amount of income, that's a big chunk of a lot of people's monthly income, paid.
Oh, absolutely.
Paid towards one item like that,
Right. You have, and you think about it, what you said, when you have that stress in your life, your health changes.
Yeah.
Money stress is a direct correlation to health.
Yeah, absolutely.
So, for us, we make sure we sit with clients and sit down with them to discuss these type of issues, which a lot of folks in our space don't talk about. It's human issues that we talk about. And for us, when we're talking about clients about money problems, we want to be able to create an exceptional planning process that we take clients through. It's just not money that they're dealing with. There's a lot of financial decisions that we make. And when you make these with your advisor as your cohort, your partner in this situation, it's essential to really address and the emotional side of money when you speak with people, especially when you're going into retirement. Because the three things that we talk about, Doc, is number one, we never want you to run out of money.
Right.
Number two, we want to pay the least amount to the IRS. Now, all of us have to pay somewhat in taxes, but we want to pay the least. And the last one, which we're talking about today, is not be a burden on your family.
Right.
Because this happens. People live longer, and the burden goes on to who? The family.
Right.
And that's something that we address up front. We budget you for this. We prioritize you with this. We motivate you in such a way that we change some of your spending habits, and we construct a game plan just for that.
Well, like I said, Joe, just to get to that last point, there's a couple of things I wanted to bring up before that. But one, since you just talked about our last podcast we did was largely on long-term care, which, is real, that a lot of people don't know about. And I told you, I read that book, Who Has the Best Healthcare System? A lot of countries haven't even addressed this issue. Like all the countries of the world, even sophisticated countries like, Switzerland and Denmark and Norway, Sweden, they really don't have any meaningful. And you were telling me that the plans that we have in the United States, so many of them have sort of failed.
Back when I started out, we used to present long-term care contracts to people. Yeah. And I used to explain to people, if you look at the fine print, these things could blow up or be costlier when you get older. And that's what's happening now, because the actuarial folks, the insurance companies never calculate people are going to keep these plans and people are going to live longer. And the price for health care to go into a facility in New Jersey or Pennsylvania or in this region is well over six figures for full-blown healthcare costs.
Right.
We also put plans together deliberately to prevent, the system of grabbing our money. We put certain income plans together for people, and this is updated every year. Like we talk about with you and I, we update, you and I get together like a checkup once a year. So we never want you and for our relationship with you to deviate off where you're not on point. And we want to make sure that the things that people talk to us about, they feel good about it. You know, it doesn't have to mean I'm giving you a better rate of return than someone else, but we want to make sure that the stress level that you have with money drops, doesn't increase when you go into retirement.
Right, right. The other thing, again, speaking of, I have to say, my retirement plan, basically my retirement plan was largely just before I met you, which we've been together like 5-6 years now. But, before that, it was largely just pay for my house, put money as much as I could into my pension plan. And really, that was pretty much and I had some life insurance. That was basically the three-pronged approach. What I didn't realize until I retired, talking to you and other people, that money in your pension plan. I looked into a Roth when they invented it back in whenever it was, the late 90s, I guess. And I was advised by my accountants at that time that it was going to cost me too much money to convert it to a Roth, and it might not have even been worthwhile. Right now, I'm in such a high income level, even retired, that I wouldn't have had that much benefit from a Roth, But
the biggest concern in reference to what you're saying is that you get mixed opinions, because a lot of CPAs currently, they're more tax preparers. I do tax planning. And I ask this question to everyone when I meet with them. I asked them, I said, considering 38 trillion in debt and considering we got approximately 76 million boomers in the next 10 years that are completely out and retired, what do you think is going to happen to the system? Do you think taxes will increase or decrease? And a lot of people I talk to, increase. So if I don't plan correctly, and because of that planning strategy and lowering your stress as a trusted advisor, my role is support you as a whole person, not just money. I can manage investments easily, but life throws a lot of different curveballs at us.
Right.
Just mentioned. And the challenge is, I want to see expected joy working with an advisor, but we are committed to build financial and emotional resilience that makes life so much nicer and so enjoyable. And that's what I believe in. And now you mentioned something earlier, there's Roth, there's IRAs, there's non-qualified, there's life insurance, there's stocks. There's ETFs that we deal with. We do it portfolio management. But at the end of the day, if you don't have a game plan and it's written down and you're testing that every year, no different, Doc, that you go to a doctor, even though you're a doctor, once a year to get a physical to make sure you're working at peak performance.
And do the tests that need to be done, whatever screening tests. There's a handful of screening tests that do make sense to do, at a certain time, colonoscopies, for example, and that they're moving that down. They've moved that down to like 40 now, everybody, because they're finding people are getting colon cancer at younger and younger ages and things, breasts for females, mammograms, and knowing whether or not you have a family history, for mammograms, But the girl I was talking to you about it, kind of wishing that they had done the CA 125, which is a screening test for ovarian, might have found something out sooner,
And for us, it's like us having an RMD conversation with the required minimum distribution. Or what type of risk are you willing to take? Or legacy planning. We encompass all those conversations. But again, at the end of the day, the more I make it simple for people, the clearer for them to feel good about what we're doing. And to me, that's the most important thing as a professional that I can do for my clients. And I have no intention to get out of the game like you do. I enjoy it. My family works with me. I work with my son, my wife. And because of technology, we were talking earlier, I can do this with a laptop and a phone all over the world now.
For a long time.
With that ability to do so.
Right. Yeah, really, it really
We're never
That's
out
good.
of touch with you, Doc. You know, you can always
Right.
get me on the phone and such. So, I mean, luckily, and I don't say luckily, I would say I formed that relationship with people like you to really give you the right answers as quick as possible. I don't want you to think that you're an AI documented, you're an 800 number. That's not the game we play with our clients. Right. We take a real vested interest in helping people. But a lot of times, what you said earlier, it's an emotional roller coaster if I don't get this under control. So we understand what income that clients need going into retirement. We want to address that right up front. Right. And when that happens, it's amazing how people kind of like look at us and go, wow, why don't everyone do that? Well, They don't take their time and to really know the person and the client. And I think for us, because we are fiduciary, that's an important factor in how I believe and what I do to be the best situation for all the people I ever come in contact with.
Well, like you say, financial stress is one of the biggest motivators of stress, biggest movers of stress in almost everybody's lives. It affects marriages, tremendously. When you just have to make, when you don't have enough money and you have to start prioritizing, you want to do what she wants to do or you want to do what he wants to do, right. that leads to a lot of problems, and it leads to health problems. What you and I, other one thing I want to mention as part of the podcast, I know you work out probably almost every day. I work out almost every day. That's another great stress reliever, but it's not going to make your financial situation that better. It's going to make you healthier and make your stress better. But to me, the things kind of work together. And it's almost like, planning your finances is almost like working out. You've got to plan your workhouse. You got to make sure you got aerobic and resistance. You got to have pension plan and house.
Well, you need to have someone. You need to have someone looking at the big picture. It doesn't. Right. It's a microcosm situation for everyone. You really have to have someone like myself, at least have that background, be able to look at all the variables and then address them accordingly. But when I do that, the stress level diminishes it. It's amazing how you can just see by speaking with the people I speak with and getting the feedback I get immediately, because I ask some of the difficult questions. What are the number one priorities that you want to accomplish today? And that just turns into different conversations. But at the end of the day, it's just not about money. It's about how do I make your life easier, and what do we do, and when do we do that? And which is really a lot for me, is a lot of fun and enjoyment because of that exact situation. Lower stress, better relationship, and for that person and for us, I couldn't have asked for anything better if I could continue to do this, and it's no stopping me now.
Right. Well, yeah, I think we covered a lot of the things we wanted to go over. The sequence of return you're talking about, that's just planning how your investments are going to work as you retire is what you're talking about. Yeah.
In one of my chapters in my book, The Heart of Your Money, and anybody can get it. It's on the Amazon, and it is in audio book format. In one of the chapters, I talk about sequence of return. And it's just funny because early on, my first book that I did a revision of this particular one, I would come up with people and I would just meet them anywhere, just in Starbucks, and have a conversation. I said, can I have some fun with you? And he said, sure. I said, are you familiar with sequence of return? And you'd be surprised how many people do not know sequence of return. But basically what that is when you're putting money away into a portfolio, an IRA, a 401k, a SEP plan, any of the places you might deposit money on an ongoing basis.
One time or another.
Right. It goes up and down.
Yeah.
But you cannot use that same strategy when you take money out.
Yeah. Yeah.
Because if you take money out in a declining market, I'm not just saying a year decline, I'm saying month declining while you're pulling money out, whatever month it may be, you can devastate a portfolio.
Yeah.
And if you don't put a plan together and have the client understand that sequence of return can really blow up in your face, because volatility kills income planning. So if I don't get this right up front and making sure the client understands this, It's like it's like telling the patient, by the way, I have some good news and some bad news.
Right.
You got to tell them both of them.
Right.
It's just news. It's not, see, either news can be deciphered different ways, but it's just news. You got to inform them of that information and let them themselves make a decision. But what I find, it's not about that my fund can beat your fund. That's not it. It's about how do I put this together to maximize all the IRS rules that change every single year for me. It's just overwhelming. I mean, think about it. You being a surgeon, can you imagine your rules change every single month?
Right.
You'd be like crazy.
I talk about it with you know Don King. We do my estate planning with him basically, and right now there's essentially no estate taxes up until about $11 million a year. So you really don't have to do any planning, but you really need to know when you're going to die, which nobody really wants to know the day they're going to die. That's a bad thing. But the one advantage to knowing when you're going to die is you have a better chance of figuring out what the tax law is going to be. Like right now, you don't need to do a whole lot. I've been putting my kids into the making a partial owners of this house, so because that will shelter the income, some of the income, that they will inherit. But in a way, it's moot right now because we're not going to hit 11 or 12,000, whatever it is, that you 11 or 12 million, that you have to hit before you have to start paying federal taxes.
Well, it's like the big beautiful bill was adjusted. Standard deductions today. When people say, "What's your tax bracket?" I go, "Hold on. What's your effective tax rate?" There's a difference.
Right.
There's a bracket and there's a rate. And when I explain those, it doesn't have to be super complicated.
The rate is basically how much tax you pay over how much money you earned, I guess.
Right. Minus the standard deduction. Minus your standard deduction. So if you got a husband and wife over age 65, you can get close to $50,000 tax-free.
Right.
That's why it depends on what we do. It's more about where I say this in my book and such. It's more important of where your wealth is located than what it earns.
Yeah.
You think about that.
Yeah.
And what I do is I make sure with all the changes that take place down the road, I'm on top of those changes, making sure my clients are getting the top-notch tax planning strategies.
Yeah.
I don't prepare tax. I plan tax. And I'm looking up above, not in a rear view mirror like most accountants. I'm looking above the timeline of what's going to happen. And I'm not a crystal ball reader, mind you.
Yeah.
I am suggesting, like I said, with the debt and the boomers, you got to start to think to yourself, what's the next step? What the government have for us?
Right.
Utilizing some of the things that they have promised us.
Right.
They're the things that I talk to people about every day. To make
I have
sure
to say, Joe, again, with my planning, what you're talking about, one giant realization that was not so good. Like I said, the money I put in my 401k or pension plan, over the years was tremendous stress reliever to me, especially when you reach the point where it's higher than your mortgage, and that should the crap really hit the fan, you could take the money out to pay your, at least you have your house, it gave me a lot. And then as it grows, I'll at least have that couple $100,000, something like that, so it wasn't, but what I didn't know was, especially since I was not in a Roth, and Roth didn't exist for the first, 30 years or so of my career. That I when I was thinking of how much money I had in my pension plan, I wasn't subtracting taxes. You think you got $4 million, you really don't have $4 million. You really got 2.5, maybe something like that.
There's a strategy that I use, Doc.
Yeah.
Called the backdoor Roth.
Yeah.
If for those of you that have small practices, hypothetically,
it
actually, for me, if I do a contribution this year in 2025 or 2026, I immediately convert it to a Roth IRA. I don't want the money to grow. I rather take the deduction and then give it back to the government. Because remember something, with living a long time is a good thing, but it also could be detrimental. Because you're going to need more money for the lifestyle that you're accustomed to. People say, well, that might be the case. Yes, it is. If you look at inflation itself,
Yes.
you're going to have to pull more money out to pay for the things that you want.
Right.
And those things, at least the longer that I've been in this business, it's always gone up, not down.
Oh, absolutely.
We always strategize on that.
Well, anyway, yeah, we could get to. I'd say right now, just going out to dinner is a major investment compared to what it used to be. I mean, now I took my son and I went to the Lobster House the other day. It was, we had one main course each. I had one drink, I think. The bill was $115, and then you got a tip on top of that. You know what I mean? Like, then that's not an expense. That's not even a really expensive restaurant. So things are changing. Listen, it's been great, Joe. And
thank you very much,
me out a lot. And send me the book.
Always a pleasure.
The Heart of the Money, The Heart of Your Money.
The Heart of Your Money radio show and Your Heart of Your Money book. Yeah. It's in a revision state, so we're ready for that, and an audio book that goes along with that. So we're so appreciative of working together, and I do appreciate having us talk together like this on a Zoom call. So success for you, and success to all your listeners that listen to this particular podcast.
Thanks again, Joe. Thanks. We'll keep in touch.
You got it.